Hey everyone, this is Andrew Berman, and thank you for joining us for another Mortgage Leadership Outlook, where we go live with the greatest leaders in the mortgage industry. And what we've started, thanks to our friends over at PennyMac Broker Direct, we went to them and said, "Hey, listen, we want to find some of the greatest brokers in the country. Companies that they've worked with, that they've had some great experiences with, and we've met some amazing brokers, and today is no exception." I'm so excited to introduce you to you, if you don't already know, Chadwick Wade, managing partner over at Cornerstone Mortgage Group. Chad, thank you so much for joining us today.
You're welcome. I'm glad to be here, and thank you for the opportunity, and thank you to PennyMac as well.
Yeah, listen, PennyMac's great partner to work with. It's amazing to see actually the praise that has come out about working with PennyMac. From the brokers that we've worked with, both on camera and off camera. It's phenomenal to see actually what actually the power of a great wholesale lender can do for great brokers like you. So, all right, let's start actually. I want to go back to your history. Let's talk about how you first got into the mortgage business. So let's go back actually to young Chad. It's 2008. 2003. Tell us actually what sucked you into the mortgage business.
I needed some success early in my career. I've got a risk management degree from the University of Georgia. Go Dogs! I interviewed really well. I got a corporate insurance job, selling insurance to companies that generally ran premiums of $1 million plus. And I was 24 years old, coming out of college. Didn't even really have the ability to grow hair on my face at that point. And so even though I interviewed well and got the job and a nice little salary, I did not have a whole lot of success. And so very quickly, I went from wanting to be in the B2C world, right, to how do I get into the B2B world. I wanted to get into the B2C world. So how do I talk to normal folks like families and do these different things? And so it just resonated with me. I always thought real estate was cool, but I've always had a fascination for numbers more specifically. And so the mortgage business was perfect, right? It allowed me to kind of get into real estate and yet also get to master numbers and play with numbers and do things that I enjoy. So it ended up being a really good fit.
All right. So here you are, actually, you get in the mortgage business, you find a place to work for. Is it like an instant thing? Like, do you instantly actually, right off the bat, hit the ground running, tell us about, your first experiences in the mortgage business.
Well, and I shared this with you earlier, but I'll share it again. In order to get the job, I leaned on a friend for an interview, and he got me the interview. And I took a personality test, and unfortunately, personality-wise, I was not a fit for the mortgage business. Somehow that personality test, and maybe it was the 24-year-old in me, it said that I was too spontaneous and too almost unstable, is the way it was described to me. And they're like, yeah, this is not going to be a good fit. And so thankfully, I was also persistent, and I was able to convince them to let me take the personality test again and answer questions as someone who was maybe a hair more stable and consistent would answer. And then I got the job. And so once I got the job, yeah, I did. I hit the ground running, frankly. I've always been ambitious, driven, and I knew I wanted some success, and I knew I was going to have to work hard to have it. And so within the first quarter, I was actually, they had like a president's board, they call it top of the block. First quarter there, brand new in the mortgage business, I was in the top 10% of LOs. And so, it just took off from there.
Wow. That's amazing. So you remember your first loan? You remember like that first deal that you got?
I don't remember my first loan. I remember the time, right? I remember what I was doing. I remember that environment. But I don't remember the specific first loan.
Well, do you remember your first, 5-digit monthly paycheck, like 5-digit month?
No, I don't. I've never been one to focus on the money. To me, it's always, how do I close more loans, and how do I help more families, and how do I keep this thing moving forward? I'm very driven by achievement, more so than kind of the finances or any of that. Accolades really don't matter either. It's just more, I've got this chip on my shoulder. I want everybody to know I can do it better than they even think I can do it. And still to this day, 44 years old, I'm still trying to prove that. And every day I wake up and I'm on fire and I'm ready to go, and like, let's do it again. So,
and if you don't mind, take us through your routine. So take us. So you wake up in the morning. And what time do you wake up?
usually between 5 and 6. So 5 a.m., 6 a.m. I used to set an alarm. I was very much regimented. 5 a.m. alarm goes off, I get up. Now I've gotten a hair older, a little more established. I actually put a little more premium on sleep. And so I still wake up pretty much when I'm supposed to, but if I sleep an extra 45 minutes, I sleep 45 extra minutes, right? But I'm waking up in the morning, I'm having quiet time. Quiet time for me looks like affirmations. I do a little visualization. I work on goal planning. And then from there, I've got small children now. I'll actually spend about an hour with my kids. I drive them to school every morning with my wife. So we take them to school, we drop them off. Then from there, I actually go back home. I work from my home office usually most mornings for about 2 to 3 hours, only because it's quiet there. I can plan a lot better. And I've got it quiet here right now, but you guys can't see it. I don't normally come in here until 11 or 12, and that's because I don't have an office. I have a stand-up desk in a room with 8 other folks that are generally very productive and busy and loud. And my afternoons are spent helping motivate and lead and answer questions and make sure that we're all driving towards our goals.
So now, I know you're a managing partner at a company that does a lot of loans. Your team specifically does a lot of loans, but you also do a lot of personal production. So when do you get time to do your own personal production? And would you mind sharing, like, what was your personal production, let's say, for the last, if you want to share, because we all know 2020 was kind of weird numbers, maybe 2019 numbers. What did 2019 look like?
2019, 300 plus units, somewhere probably around 100 million. So, and then, yeah. I mean, and you nailed it. 2020 is a much bigger number, right? Everybody's pretty much take whatever you used to do and multiply it times 2, and that's 2020, right? And frankly, 2021 as well. So,
yeah. All right. So now to do actually those kind of to hit 300 units, you have to do a lot of prospecting. And you didn't talk about actually, your daily routine. Like, do you have prospecting time blocked out as part of your daily activity?
I believe everyone should time block out prospecting. I don't. I'm a natural people person. I stay on the telephone all the time. Like, it's, whereas a lot of people, when they want to goof off, they'll get on Google, they'll go somewhere, they'll do something maybe they shouldn't do. When I want to goof off, I'll get on the telephone and have a 20-minute conversation with somebody. And usually it's an agent. It's somebody that has some kind of tie into my business, right? So it's an agent, it's a past client, it's a financial planner. And so on a given day, I mean, I'm talking to at least 20 people every single day that's tied into my business, asking about business, furthering a business relationship, doing things. And so it's, I don't track it. Now, there was a point in life where I did, and it was 2 days every day, right? 2 hours every day of lead gen. That was kind of the metric. And then it went to 3. And then it's almost like keeping an alarm clock for the morning. You just get into such a routine and you're able to do it. That habit is so ingrained that you really don't have to set the alarm clock anymore. Whereas now with my lead gen, I don't have to make sure I get the 2 hours in. It just happens. Yeah. But I would not recommend that for new folks in the business or even people who are still just getting established. I do think they should clock it and make sure they're doing it and keep an eye on it.
So I'm assuming that template is probably something similar to what you do for new loan officers on your team or maybe in the company. So what do you recommend for new originators that are just coming in? Obviously, it's right now very easy to just pick up the phone, but going forward, 2022, it's not going to be as easy. So talk to us about, what does actually a new originator do, to be able to have some kind of production in 2022?
This business, in my opinion, is a contact sport, right? Not like football, but it's in how many contacts did you make? How many people do you know? I would encourage anybody new every day, 2 hours of lead gen, right? And I would start off, and if you could do 3, go for it, right? But 2 hours is a lot if you actually clock it. So I would say minimum 2 hours a day of lead gen. I'm not a big fan of cold calls. And so a lot of our lead gen, it originates around this idea of calling people who we've warmed up, right? And so I would figure out, Dunbar's rule says everybody knows about 150 people that you've got a decent relationship with. I would figure out who my 100 or 150 people are that I have a good relationship with, and I would lean on them to figure out who do those 100 to 150 people know. And I would create a list of all the agents, financial planners, maybe even insurance agents, maybe even mortgage folks, anybody that's kind of in this business or around this business that they could network with and potentially get business from. I would create a list of all those folks that the people I know, so they could give me a warm introduction to all those people. I would then reach out to all of those folks. More likely than not, I'd probably have the person I know send maybe an email introduction, like, hey, hey, Todd, I just wanted to loop you and my friend Chad in the mortgage business together. Chad's a great loan officer. You're a great financial planner. I don't know if this would be a good, introduction or not, but I figured it couldn't hurt. I hope you guys hit it off, right? And then from there, I would follow up, right? But this idea of warming it up, it changes everything, because now the financial planner probably feels like they at least have to respond to me, which is good, because then we can start some dialogue and we can have a conversation. We can meet, we can be friends. And, all of a sudden now you're starting to have some success versus old school, calling through a phone book or lead list or whatever it is. Cold calling is what I call it. That's tough, man. You can build a business that way, but it is a very hard way to build a business, in my opinion. So that's what I would do. I would call a lot of people every single day. I would make a lot of friends, but I would do it by leveraging the friendships I already have.
Interesting. So, give us an idea of going a little more into the script of what you would do. Let's do a little role play. So let's say actually you're trying to, you're calling me. I am actually a financial advisor.
Mm-hmm.
And you're trying to actually get the opportunity to understand what how we can do business.
Yep. All right. So for me, I never make it about me, right? It's always going to be about you with me, right? So I'm going to always figure out where can I add value. A good example, we just built a building. So I'm in our new building. We're Alpharetta, Georgia. 6,000 square feet building. It's awesome. 1/3 of this building is a training room with 30 chairs and tables set up and a big old projector. And that training room is solely for our business partners, financial planners, any other business owners in this area to use just for events, just to get people together. The reason I did that is I want to connect with people who have these types of events, right? And I want to give them a free place to have these events. And it's a way for me to give back to these folks without ever even having to ask them, will you be my friend and will you do a mortgage with me? So conversely, but it's okay. My heart's in the right place. I created, our training room, if you're ever in Atlanta, swing by. I mean, this thing's state of the art. Everything's Bluetooth. There's screens. We actually built out a mini kitchenette in there. So whenever things are catered in, folks have it. And so real estate agents, I had an event today. They come to my office, have their events, and they say hello to me on the way out and thank me for getting to use my space. Now, that same agent, whenever he has a referral, do you think that he might send it to me? The answer is yes, right? Yeah. I add a ton of value. And so, I would enter that conversation. Number one, I would get introduced to you as a financial planner by somebody that I already know. That way it's warm. Yeah. And then I would go into that conversation a whole lot about, Andrew, tell me about you. Tell me about your business. Tell me how I can help you. Like, what are your challenges? And very immediately, I would start trying to figure out where can I add value. I probably wouldn't talk about mortgages a whole lot, frankly. I don't think I can talk about having the lowest rate and the best service any better than the 100 other LOs that are going to talk about how low their rates are and how great their service is. And frankly, I think we sound like a broken record a lot of times when that's what we talk about. Yeah. And so that's honestly the last thing I want to talk about. I want to be friends, and I want to demonstrate that I'm a high character guy, and I want to add value. And if you do those things, you'll get a shot, and you don't even have to ask. People will just give you a shot.
Having the lowest rate, that's just you're supposed to. You can't actually. No one has the highest rate. Yeah. And it's so you need to actually have that. And then there's something actually that is on your profile, and I just wonder actually, if this is just a marketing phrase, because I'm pretty sure it's not. Knowing you, talk to us about your concept about creating raving fans. Like, what do you do within your mortgage process to create raving fans?
In what we all know what a raving fan is, or if we don't, we should, right? There's a book. It's a short book. It's an easy read. Everybody should read it. There's a few different mortgage companies that have picked up on this book now, and we all aim for this service. And this is white glove service. It's 5-star service. It's whatever. One thing that makes me different is all phone calls to me, they get routed through somebody that answers my calls for me. And it's not because I don't want to answer my telephone. I have a dedicated person, Bailey is on my team right now, who answers all of our calls, to where if we ever get a call from a referral or an agent and I'm on the other phone call, or if I'm talking to you right now, right? If a client calls in right now based upon a referral, they're going to get a live person. So that right there is one little touch point. That is a raving fan thing that we do, because I don't want somebody having to leave a voicemail. The truth is I'm scared that A, they might not leave a voicemail, or B, if they leave a voicemail, they might get tired of waiting after 5 minutes and look up the next mortgage company and call them. So one of our very first raving fan offerings is we always have somebody that answers the telephone. Okay, because and that's one of the number one complaints about loan officers is you can never get them on the phone when you need them, right? So my goal with raving fan service is how do I take everything that everybody thinks is wrong about this service, and how do I turn it upside down and do it different? And so, and you can go down the list. I mean, we've got systemized updates to where, and a lot of folks do that now, right? 2 times a week, if there's any milestone that we've reached or not, we're reaching out to our clients that are under contract or in process, and we're telling them, hey, this is what's going on right now. So, I mean, there's times where we reach out where there's no update. We haven't even hit a milestone. The appraisal didn't just come back. The file didn't come out of underwriting, but we're still reaching out saying, hey, we just wanted to reach out and just make sure you're good on your end. There's no updates right now, but we'll be sure to give you one soon. And so little things like that. It's just all the little things. They add up. But at the end of the day, what I like to say is raving fans, it's raving fans equal 3R. And 3R is raving fans equal referrals, repeat business, and reviews. And so if you can create raving fans, you can create a business that really has continuity, because you get referrals, you get repeat business, and you get reviews. And all 3 of those things are pretty much very important to a thriving mortgage business.
Yeah, I'm assuming it's one of the reasons why you don't have to actually pick up the phone for 2 hours a day, because these referrals are just coming into you on your personal production. So if you just stop doing any prospecting, this stuff's just going to automatically come into you, just because you've created these raving fans. They're giving you referrals. They're giving you the reviews. What was the third R?
Repeat business. Repeat business.
Yes. Okay.
Reviews, repeat business, and reviews. Yeah. Now here's the deal. I don't want anybody listening to this to think I don't prospect. I mean, I am on the phone. I would challenge anybody to spend as much time on the telephone as I do on a day-to-day basis, right? So I am on the phone. I'm just having different conversations now. I'm 2004 is when I got in this business, right? So I'm 17 years in at this point. These aren't even just lukewarm calls now. A lot of my calls are hot calls, and I'm really like strengthening long-term relationships with agent partners that do 200 and 300 deals a year, right? And so it's different. But I don't want anybody to think that you can have success without picking the telephone up, because frankly, I don't think it's possible.
I'm going to guess. See, now it's just when you're this far into your business and you're this far into your practice, you don't even view it as prospecting, because you're just hanging out with your friends. You're talking to your friends, people that you've built these relationships. That's why you're yielding these 3 R's out of it, because they've actually come to like you as a person, and they're friends. They're not just clients anymore.
Well, they're friends, and they're growth partners too, right? And so we're on this, and that's what I like to do. I like to link up with people who are growth oriented, similar mindsets, where they want to get on the rocket ship just as much as I do. And then we talk about how, hey, what if I did this? What would this look like in the mortgage business? Do you think other agents would like this? I'm like, yeah, that'd be great. And then conversely, they ask me questions about real estate. Like, man, do you think I should hire more listing agents on my team? What do you think about that model where we just add listing agents? And, I pour into them. So you become a trusted confidant over time, but it takes time. So, yeah, it's fun. It hasn't always been fun. I'm not going to lie. The first 5 years aren't glamorous. You've got to grind, you've got to hustle, you've got to pick the phone up a lot. It does get easier over time, though, 100%.
So let me ask you something, Chad. And we didn't talk about this, and it's something that I probably should have actually mentioned to you, that I was going to talk to you about this. But you're an open book, and I like that about you. That's why I feel like I could blindside you with this topic. Partners. It is so difficult to find someone actually that you could have a partnership with, and it seems you have that. Talk a little bit about your partners. So
when you say partner, do you mean like real estate agent partner?
Your managing partner.
Sure. Yeah. So me and Stuart Sadler run Cornerstone Mortgage Group together. So in addition to running the team, the Atlanta Home Loan team, I run Cornerstone as well. That's an interesting story. We knew each other from the University of Georgia, and we always said we would run a business together. And when I got in the mortgage business, after I took the personality test twice, I started having success in the mortgage business. After about a year and a half, I had enough success, and I went from one company to another to where finally I wanted to build my own thing. It didn't take real long, but I did. And I just knew in my heart that I wanted Stuart to come along as well. And I guess because, and he's very intelligent and competent and very driven, very much like me. And I guess because I had success as quickly as I did, I just assumed he would as well, because he didn't have any experience in the mortgage business at all. And people all the time ask me, because we're 50-50 partners. And they're like, so you brought him in like 50% from the get-go, and he didn't even know anything about the business. And I'm like, well, yeah. What was I going to do? Like 49-51 or something? And a lot of attorneys will tell you to do it that way just because you can kind of overrule the other guy. But
yep.
Anytime you want to overrule somebody or you want to be in charge, like that's just not the growth mentality, right? You need to be in it. You need to be in it together. And if it's going to work, it's going to work together. If it's not, and it's not. But we came in 50-50 from the get-go, and he's always worked just as hard as I have. And it's a great partnership. And we've never had anything that we couldn't agree upon. So there's never been an instance where it was like, because I'm 50.5% and he's 49.5, I was able to like lay down the gauntlet and make something happen. Like the 50-50 thing has worked, and we've never had to have like an arbitrator help us. So yeah, it's great having a partner. It's he and I, now I keep up with his numbers. So you asked me earlier, like when's the first month I had like a 5-digit paycheck? I couldn't tell you, but I can tell you on any given month when I have a better month than he has, because we always, like, he knows when I have a great month, I know when he has a great month. Like, it is a very healthy competition between he and I.
That's great, because you're both winning. You're both winning, actually. So that's an awesome thing. So obviously it's not money, it's not production, as your scorecard.
Yeah.
So what do you use as your scorecard for you personally, your team, and the overall Cornerstone? Talk to us a little bit about it. What those scorecards look like, just so you're evolving. Because if you're not getting score, how do you know you're getting better?
I will tell you this, Andrew. I operate differently than a lot of other folks. So my partner Stuart, he's like a coach with the Core, which is one of the biggest coaching companies for mortgage originators in the nation, and he does things by the book. Like he would be a completely different interview than me. There's things about me that drive him crazy, right? The idea that I don't want to set an exact 2 hours a day that I prospect. We have goals. I set goals because we need them, and my team needs them. But at the same time, I'm one that thinks that goals sometimes can be limiting, frankly. I don't like goals. Like if you set a goal and it's not big enough, then it doesn't pull you. You set a goal and you don't hit it, you feel crappy about yourself. I'm a bigger fan of just give it your all every single day and follow the habits that will lead to your success. Yeah. And then just let it play out the way it's supposed to play out. And so, as a team, we set goals though, because it's important. I understand that everybody doesn't operate that way, and a lot of people need that carrot in order to make things work. And so, for us, we've got referral goals. So we track every incoming call, every referral we get. We've got submission goals, and this is the difference in lead and lag measures, right? A lag measures how many loans did you close last month. A lead measures how many referrals did you get in. And so I've got metrics for everything you could possibly think of, and I'm really good with numbers, and so we track it all. And so we've got goals across the board. Now, one thing I believe is that if you're not growing, you're dying. And if I had a goal where, this year's a great example. As an LO, if 500 units was like the end all be all, well, this will be the second year in a row that I've surpassed 500 units production. I'd be at the end of this thing. That's not good. I'm trying to grow a team. I'm trying to scale. I'm trying to leverage. And if I can't create enough opportunities for the people that work for me to be able to get what they want and for them to be able to grow and to make more money and to do all these other things, at some point they're going to leave me. And so I've always got to have this mindset to where we're growing, we're doing more as much as possible. And so again, that's where, a lot of people are, hey, when will enough be enough? The answer is never. Like it won't. We're going to keep growing, or I'm going to go ahead and just own that we're dying a little bit. And that's okay too, if I'm willing to say that, but I'm not willing to say that we're dying yet. We're still in very much a growth mode.
Yeah, so it's like you're pedal to the metal, and you don't even know how much gas is left in the tank. You just
There's a lot. There's a lot.
So now was there a time actually where you would focus on, because I think people actually confuse goals with, because a goal if it's something you can't control, it's not really a realistic goal. Like, in production, to say actually, well, I'm going to do, 400 loans this month. You can't do 400 loans this month. You like, there's 400 borrowers that have to say yes,
Yeah.
but there's actually activities that lead up to it. Like how many times did you make? How many dials did you make? How many referral partners, as you were talking about. So was that something that you did early on in your career, or something you encourage actually your originators to do? Actually, is to to keep goals that are things that they control, like phone calls or visiting real estate agents.
Yes. Yeah. So I mean, all the goals on our side, they're all lead measures, right? So it's phone calls, it's how many lunches did you have, how many one-on-ones did you have. These are things that we would call lead measures. We track lag measures, we track closings, we track volume, all that, but we don't manage to lag measures. We manage to the activities, and then more specifically to the habits. If we can create habits around the activities that we want to see, now you're onto something.
Okay. So tell me a little bit more about the habits around the activities, because I think actually the activity is the thing actually that's the be all end all. But tell me about the habits around the activity, because you got me very curious here.
Well, no, I mean, anything could be a habit, right? Brushing your teeth is a habit, right? I mean, you could have a metric for how many times a week did you brush your teeth, but hopefully at least twice a day, right? When you wake up before you go to bed. At some point, that activity that we can measure, hopefully it becomes a habit. And frankly, I hope for everyone, they don't have to track it anymore. I hope they just brush their teeth twice a day at least. And there you go. And so that's what I like to see in the people who work for us. I want 2 hours of lead gen to become a habit. Like I want you to go to a point to where you don't even have to measure it anymore. It's like brushing your teeth, right? I want 5 one-on-one appointments a week to become a habit. I want it to be understood that every day you're having lunch with somebody. I don't care if you got to go with your best friend, stay in the habit. And you could tie that into personal life. A lot of times I don't want to go to the gym, but sometimes I'll go to the gym just to go to the gym. Like I get on the treadmill and walk. I won't do anything, but I will go and walk on a treadmill just so I'm at the gym, because I don't want to get out of that habit of going to the gym every single day. So, I mean, I believe in habits enough that I would personally go to the gym and do nothing versus not go to the gym at all, just so I can stay in the rhythm. And so I am a creature of habit. I'm a very just dependent upon kind of rhythms and schedules and regimented. Other folks, this might kill, by the way. Like I understand personalities enough to know that there's people who thrive on this type of environment. And then there's others that are like, oh my gosh, like, Chad's probably one of those guys that eats chicken and vegetables every day for lunch. And the answer is yes, I do. Every day, pretty much chicken and vegetables. And I don't need to change it up. Like it always tastes good to me. And so that's just, I don't know. There's probably a deeper conversation here of figure out what works for you and then roll with it.
So, and then you talking about personalities. So we talked about actually the personality test that you failed to get into the mortgage business. So tell us actually, like, how do you hire today? Do you use personality tests? Like, tell us actually, like how you built your team out, from like how you identify a potential hire and how you actually, kind of separate the potential from, we're hiring this person.
Yeah. Generally, it's by referral, right? So a lot of times I'm going to reach out to that network. I'm going to get people introduced to me from other people that I know. And that's good for multiple different reasons. A, you don't have to pay a recruiter, which is awesome. So you can save a little bit of money. But B, generally, anytime somebody refers somebody, they're vouching for them a little bit, right? Like if somebody asks you, hey, do you know anybody that might be a good fit for me and my team? And you're like, well, yeah, I know this guy named Jonathan. If Jonathan sucks, you're probably not going to tell me to call Jonathan, right? So that becomes a filter in itself. Then from there, what we'll do is a one-on-one. I'll get a resume. We'll do a one-on-one, and I'll actually have them do the Tony Robbins DISC personality test. And Tony Robbins has a free DISC personality test. You actually have to pay for the DISC measures now. I think it's like $10 after they take the test, and we cover that. But we'll have somebody go after our interview to, I'll tell them, hey, Google Tony Robbins free DISC, complete that, and then send me the results you get. And then from there, I'm gonna pay for the results, so we have them, and then I'm gonna share them with you. We're gonna go through them, and I tell a lot of folks that my first gig, I had to take a test and I didn't pass it, and I still got the job. So don't freak out. I just want to know how you're wired. But the last piece is, for me, it's not so much your experience. It's not so much even your personality. It's, are you going to be a good fit culturally? And are you a fun person to be around? Do you have good energy? And do I think that you can fall into the routine and the consistent schedule that I believe in? And if the answer is yes to all those, I think we're going to be fine. I think we can work together, and I will hire you. Now, the other thing I do is part of being a good person. Like I'll do an extensive like online, like anybody that's been hired at my company. I've done huge background checks personally, like social media, all these different things. And so, there's a guy I didn't hire last year that some of my business partners told me to hire. Some real estate agents were like, "Hey, this would probably be a good hire for you. Why don't you take a look at this guy?" And I interviewed him, and a nice enough guy, but online, the guy just had one of those brass personalities where anything that's divisive, which, it could be politics, it could be religion, and now you can add COVID to the mix. He always had an opinion, right? And that's like a huge flag to me, right? And so I try to get people who understand what it looks like to kind of stay between the lines and just maintain like harmony and want to do a good job, but not offend folks. And, not that it's not okay to stand up for yourself and speak out and share what you're convicted about. But at the other time, if you're going to be in this kind of a public facing business, you got to be real careful with how outspoken you might be. And so, I'm looking for good folks that are going to work hard and have good energy and contribute to a positive culture.
You want them agreeable. You want people that are agreeable, because when they are, in many cases, they're going to be able to work with the underwriters when something is not actually meeting what they understand the guidelines as. Working with processors, working with borrowers, who all of a sudden have an opportunity to get an eighth of a point less with their cousin who just got into the mortgage business. So right. I think actually that being agreeable is a great trait. So listen, I'm one of the things I want to kind of wrap up with, I believe actually in this world, we're influenced by people we meet, places we go, and books we read. There's someone actually who I remember said this at a conference. I wish I could remember actually who said this, but you and I were just talking about a book that impacted your life, and impacted your practice. Talk to us a little about that book.
Any specific book?
Well, we were just talking about the
Millionaire Real Estate Agent.
Yeah.
Oh yeah, yes, that's a great book. Yeah. MREA, affectionately known. So Gary Keller and a guy named Dave Jinks, who just passed away today. He was the co-author of The Millionaire Real Estate Agent. Great guy. You should Google him if you don't know who he is, and just particularly the way that he passed away today. He actually did a final Facebook message to just everybody. Capping an extraordinary life. It's heart-wrenching, yet at the same time it's beautiful. But The Millionaire Real Estate Agent, that book by Gary Keller and Dave Jinks, me and Stuart read that probably 15 years ago. And very early on, we decided that we were going to grow our mortgage company really based off the same model that Gary was giving real estate agents to grow their real estate businesses. This was, you see it more now in the mortgage business, teams and leverage, but 15 years ago, loan officers were generally just one-man shows. You didn't have these teams, right? But the real estate agents, they figured out a lot sooner than we did in the mortgage business that you can accomplish more if you've got a team. And if you're a loan officer, you're probably not really detail oriented, right? And so the idea that loan officers should do everything and should be kind of one-man shows, I think it's amazing. Anytime I meet an LO that does everything themselves. And there's a piece there where they are able to control everything that I actually envy a little bit. But conversely, I think I'm smart enough to know that you can't be good at everything. And as much as I like to get on the phone and have 30-minute conversations with people and pour into relationships, every time I do that, that's 30 minutes that I'm not handling compliance, and I'm not making sure disclosures were right. And I'm not making sure I had a complete 1003, and I'm not making sure that phone gets answered on the front end. And so, the Millionaire Real Estate Agent book, what it taught us more than anything was, A, there's a system out there, a model for how you can grow a thriving real estate / mortgage business. And B, it was the blueprint for how to do it. And so, we've grown our teams at Cornerstone really based off that blueprint. We've had to tweak some things, right? Because, after the first hire in the Millionaire Real Estate Agent book is it's an executive assistant. Second hire is generally a buyer's agent. We don't have buyer's agents in the mortgage world. And so it's more like an LOA, a loan officer assistant, but they correlate very well. And so I would encourage any LO out there, particularly you mentioned new ones earlier, if they haven't read the Millionaire Real Estate Agent book, read it. Like, even if you don't, pull the models and systems from it the same way I do, it gives you something to talk to real estate agents about. Like, in my opinion, it's the most famous real estate book ever written. So why wouldn't you read it if you're going to be in the mortgage business?
Yeah, and if you're talking to a real estate agent that hasn't read it, buy them the book. This is a great opportunity. I love it. I think it's great. Maybe even create a study group actually around that book with people actually who haven't read it. I love it, man. That's great. Thank you for sharing. Thank you for sharing. I mean, you've shared a lot here, Chad. I really appreciate it. I love actually just from the your entrance into the business, how you create the repeat business referrals and reviews from creating raving fans, just to how you hire, your unique relationship with your partner. Just Chad, really great spending time with you today. Thank you so much for joining us.
Well, it's an honor and a privilege, and thank you for having me.
Fantastic. And PennyMac Broker Direct, thank you so much for introducing us to another amazing broker. Really appreciate the partnership that we have with PennyMac Broker Direct. We've been meeting some amazing brokers. We've got another episode coming up next week. Hopefully you will join us for that. Everyone, hope you have a great rest of September. Stay safe, stay healthy, and we will see you next week.